one of the things that Adrian was going to emphasize, I know, is the points where an investor, emphasize the points where an investor sees an opportunity to trade. And there is, it surprises me that anyone is unable to see this for himself or herself. I must be careful about that. Anyway, the fact is that large companies do not offer an opportunity to trade. Very occasionally, there's a bit of an opportunity, and one that came up the other day was Glencore. I myself was minded to be short of Glencore on the grounds that I've simply never trusted the company. And you might very reasonably say, well, you don't trust Glencore, but why not? Well, of course, the answer to that is I don't know, because I don't know what goes on inside Glencore. So it's a bit difficult to say that one distrusts a company. But a friend of mine who does know Glencore very well and its management said that I was completely wrong, and that in fact this company had a remarkable reserve of talent, and furthermore that my feared special deals waiting to come undone within Glencore was not warranted. And the fact is, there wouldn't be this great unravel. Well, some of you may remember that Glencore hit about 65 or 70, something like that. Well, this is one of those compelling buy moments in British commercial history. And that was a point where I myself had a bit of a dabble, particularly because there's no stamp duty payable on Glencore. Many people say, well, you're a mean man if you won't pay stamp duty. But I think to incur a 0.5% penalty for no reason at all is completely mad. So therefore, if one finds a way round paying stamp duty, I think that's rather a good wheeze. Anyway, last night Glencore finished at about 160, something like that. And I wouldn't say that a long position in Glencore was free of risk, but it's certainly interesting as to what can happen to a share price once a perception has changed. And this was a very clear case of where the market's understanding of a company could change, and indeed did change. But you're never going to get that in Marks and Spencer. So why people spend time studying Marks and Spencer, I do not know. Save, it should be said, that when it comes to anything to do with women's clothing, one should never listen to any opinions originating in the city. They are astonishingly ill-informed. There is only one way to study what is going on with women's retail clothiers. That is to ask your wife. If you haven't got a wife, perhaps you should invest in one. And having invested in one, establish whether she has a good judgment in the matter of what people like in clothes. But that is the way to deal with women's clothing. For instance, I'm not expressing any opinion here, lest it be thought I'm trying to work a flanker, but French Connection might be very cheap. But until you know what the real appeal of French Connection is, you just don't do it. I'm sure there's a way of finding out, but I haven't found out what it is. if someone really does know what's going on in French Connection, perhaps they'll tell me. I may add, you've got to take into account the cost of its premises. That's a separate matter, but those are the two problems at French Connection. It's the appeal of the closed to the real buyers, and the other is the continuing cost of its premises around the UK. I started my investment career in a rather incompetent sort of manner when I was 18, and I'm now 69. And this, you will note, goes back further than 1980, when the first insider trading laws emerged. In fact, the first act, believe it or not, was one side of a small sheet. I'm sure those of you who know how government statute is published will confirm that most statutes are rather small pages. They, of course, I say it's small. The Financial Services and Markets Act now seems to run to pages, and the pages get larger. And the Companies Act 2006 is frankly ridiculous. So perhaps I'm wrong in saying that statutory legislation is on half A4 sheets, because the truth is the matter is events have taken over. There's more and more law pouring out, much of which, of course, is never read. But the fact is that the first insider trading act, which came out, I think, 1980. It might have been 1981, but I'm pretty sure it was 1980. It was just one side. And I said to myself, well, I don't think that constitutes much of a threat to people who want to know. And so when in 1983, I can't be more specific than that, or 1984, a well-known engineering firm in North London, was big, was rumoured to be ready to be taken over. I decided that instead of relying upon a rumour, I would go and see the company myself. And my purpose, of course, was to see whether the factory, it was a big factory too, was busy, or whether it was subdued. I just want to go and see what the sense of the company was. And so I went there, and much to my surprise, the company secretary said, well, I can't show you the works because we've got an embargo on anybody looking at what's going on in the works. Well, of course, the moment he said that, I had to ask myself the question, why would they have the embargo? So I returned to my office and got buying shares left, right, and centre. And it worked out jolly well, I can tell you. Whether one can do that nowadays, I don't know. The rules are getting tighter and tighter, and anything can happen when you're not looking. For instance, the law on market abuse is open to any interpretation you like, and the interpretation is offered by a lawyer. Well, I've learnt the hard way in life that until proven otherwise, a lawyer is an idiot. And I'm sorry to say that the authorities have a hell of a lot of idiotic lawyers working for them. And you might say, well, if they're idiotic and don't understand law, there's no problem at all. And I can assure you that is not the case, because they can invent completely pointless poses in law, and then you've got to spend thousands and thousands of pounds on lawyers resisting them. So one has to be extraordinarily careful. Now, make no mistake, the old insider trading law was that the inside information had to come from within the company. as long as you avoided ever having information from the company, you were in the clear. But it's expanded now to the point where merely learning that someone might sell a significant block of stock and then taking a step to say sell in advance of the possible seller is contrary to law, and which strikes me as completely mad. But if you doubt it, go to the Financial Conduct Authority website and look it up. It's amazing what these chaps can do. In fact, it is my general view that the conduct of the FCA is generally a disgrace, and a very expensive one too. And it is actually quite concerning that they have so much authority, which, in my not very humble or respectful opinion, is way, way beyond that which they should ever have been granted in the first place. Unfortunately, I'm generally in a minority holding this view, and I can only tell you that for someone who takes the work of inquiry seriously, it's a dangerous climate out there. I only mention this going on a stage further, that there is no point in buying shares which one doesn't know about. As some of you here today will know, a Frenchman said in the mid-19th century, long before the FCA was conceived, I hasten to add, said that he who buys shares without knowing what's going on is as stupid as he who buys cattle in the middle of the night. It's a very fair point. Why would one buy something which one doesn't know about? And so one goes back to the problem of knowing. And here, there are lots of opportunities available to the attentive investor, particularly the smaller private investor who doesn't have to move the price when he's trying to pick up stock. And I urge those here today who haven't tried this to give it a go. It's really very, very interesting. The first on the list, I've got several here. The first on the list, which strikes me as worth a look at, because you can monitor it, I beg your pardon, by the day or by the hour, if you like. And that is a product called Vamoose, V-A-M-O-U-S-S-E. I think the idea of Vamoose is to mix vanish with mousse, which you get various applications to the head. Comes in mousse form. Anyway, that's Vamoose. And the point about Vamoose is these are naturally occurring chemicals which clear lice. Now, this is a long story. Those who know this company, they've been touting for funds and so on for years now. I don't know how many, perhaps 10 years. And it certainly hasn't taken off in stock market terms. It did have a brief surge about 3-4 years ago. And it was a bit of an opportunity there. And I sold my holding. I may, if memory serves me right, have been a bit short of it on the way down again from around 20p to at one stage 2p. So I've been with this company for a long time, but I've looked at it not from the point of view of having children for whom I'm responsible who might get lice. That pleasure is conferred upon my grandchildren. If they get the scratches, then it's my daughters who'll be looking out for the lice. But the question is, does Vamoose work as a product? Well, you can go to eVestigate, which is the site I use for regulatory news service, announcements, and you can see the retailers who feature Tyra Tech. I think I remember rightly, it's now in Boots or Superdrug in this country, and others have got it now as well. And it seems to me, when I'm looking at the results statement a few days ago, that Vermouth sales are clearly going ahead very sharply. Whether they're going ahead sufficiently sharply to make a reasonable profit, I don't know. All I do know is that if this thing takes off and does start to make a profit, it will be a spectacularly attractive profit. Vermouth or Tyra Tech is only capitalized at around £15 million. And I should think the commercial opportunity for an investor arising on Tyra Tech is changing almost by the week, because it doesn't take a big uplift in the sales of such a product before the effect on profits comes through very strongly. Of course, it must be said conversely that if the sales don't come through, you can be sure as you like there's going to be a strong demand for more cash to be raised as well. So it goes both ways. Well, why I mention it is that people go out on the high street and they look at these stores, and it's possible to check whether Vermouth is selling or not. I haven't done it myself, but I just hear reports from people who have. And I understand that Vermouth is selling. But again, what the position is in Birmingham or what it might be in Bristol, I simply don't know. But it's certainly worth thinking about. It's a case of a company where one is getting highly relevant market information without breaking the insider trading laws, which are now, of course, pretty severe. Also, it seems to me, nowadays, my starting point each morning is with the regulatory news service. When announcements came out on the stock exchange 20 years ago, some of them were remarkably haphazardly put together. And of course, there wasn't the internet. And so if I wanted to get a long announcement to absorb, one had to ask a broker to run it off, and he'd fax it to one, and then one would study it and so on. Well, this is quite a time-taking exercise, and as a result, it wasn't adopted by most. It didn't have, shall we say, any moral authority, but events have moved on, and the regulatory news service, and I mention this to those here today who are not lawyers and who are perhaps not acquainted with the significance of this point, and it is a very significant point, the content of regulatory news service announcements has huge legal effect. I'm not sure that those affected by the law always realize that, but believe you me, it's huge. A very good example came out yesterday morning from African Potash, who pretty clearly denied certainly the reliability, I won't say veracity, of an RNS they produced about 3 months ago. And I don't know what view the authorities will take. I'm sure they've got quite a lot of work on their hands. But the statement, or statements, from African Potash, as between the two dates, are clearly contradictory. One would have to show that the intention of those who prepared the regulatory news service announcements was to deceive, that these were reckless announcements, or reckless and deliberately misleading announcements. But it would, I think, in this case, prove interesting reading. Well, of course, to carry out this sort of inquiry means taking statements from those who produce our regulatory news service, who said what to whom when, under what circumstances. And as I'm sure most here know, that it's very easy to get lost in this sort of inquiry. But undoubtedly, there are announcements which are completely inconsistent. I'll come on to my point. I should also add that the regulatory news service announcements frequently are not so much interesting for what they do disclose, but for what they don't disclose, believe it or not, because one must always work on the assumption that the management are trying, not always I suppose, but in the main, the management are trying to put the best face on everything, and if they fail to take a point which one had thought that they might reasonably have taken, then you rather wonder as to the absence of that point. The regulatory news service goes on right the way through the day, but the studying bit starts from 7 o'clock until 8 o'clock when markets open, and then one has an opportunity to reflect upon what the market effect will be of an RNS. I rather enjoy this myself. I don't know about others here today. I suspect there are quite a number of crossword addicts here, but as anyone who knows crosswords will confirm, it's important to analyze the text behind each clue. And this, of course, is a habit in life, to analyze text. I think it was Enoch Powell who said that from his teen years, from a teenager, he became a compulsive analyst of text. And I'm sure that is the sensible and civilized way to conduct oneself in the reading department, at any rate. And certainly, RNSs produce a very, very rich harvest. Well, of course, at the time I visited this engineer in North London in 1983, the significance of an RNS in legal terms was practically zero. That has changed, and it does mean that many a small company can be looked at very carefully, i.e., if the company says that sales have risen by 67% or whatever, and you wonder whether that is true, then you have to reflect upon the fact that the management have thought about it carefully. At least if they haven't thought about it carefully, they've entered some very difficult territory. And as I think some of you here today will know, there have been some pretty serious criminal prosecutions arising from misleading the market, and in recent years, which in a manner which would never have been contemplated 30 years ago. There just wouldn't have been the basis to inquire. Whether that's a good thing or a bad thing, I don't know. I don't think that any manager of a commercial concern who tells the truth has anything to fear at all. He just has to do his best and get the information out, get it right, and think about it before signing it. And I certainly think that there are too many crooks getting away with it at the moment, and they're really just harvesting the fruits of the goodwill of many investors, which I'm not sure is entirely appropriate. Anyway, I could ramble on about this quite a bit, but the fact is that I think regulatory news service announcements are very, very interesting, and I'm surprised that most investors really don't get stuck into it. It's a very, very rewarding area of inquiry. At least so it seems to me. When one's talking about companies which one has looked into, I was referring to Tyratech. Of course, there are dozens of other examples of high street operations. One might take into account companies where there is knowledge to be obtained from in and around the trade. And I'll give you a good example of that. Two good examples, at least I think they're good examples. One is Red T Energy, which has got no cash in the balance sheet to speak of, and the ticker code is RED, incidentally. And I hadn't really thought about it until a few months ago, when a friend said, well, you realize that there are vast quantities of green energy being produced, whether it's by windmills or by waterfalls or whatever. And the trouble with electricity is that you cannot store it. It's impossible to do that. And that being the case, he or she, he said quickly, who works out how to store energy thus produced, has gone ahead of the crowd. Well, I don't myself claim any expertise at all. But for those of you who are of an engineering bent, I mention Red Energy because they have developed a vanadium battery, which will certainly, it looks to have a commercial future in California and elsewhere around the world, because there's a huge demand for storing cheap energy. There's a huge political pressure to do it as well. And provided these batteries work, and I'm told that they do, and that they are ahead of the crowd, so to speak, in terms of competition, this is a huge way forward. Now, you might say, well, how do I find out about batteries? Well, I don't know, is the answer to that. Our scientific chums, they'll tell you where to look. And if it really is the case that these vanadium batteries are providing the service that the promoters claim they do, then this will prove to be a very cheap share. I'm sure of that. But again, it's a matter of inquiry. I'll give you another one, which strikes me as a different proposition in a sense. It's more down to earth, although as you'll shortly see the eventual product goes up in air. I'm referring to Mullins, which is a company that makes machinery that makes cigarettes, and it also makes machinery that does packing. And unfortunately, Mullins had quite a business in the Middle East. Well, I don't think you're going to get paid much money by ISIS-controlled consumers just at the moment. So as a result, Mullins have had a pretty hard time of it. However, I got hold of the finance director about a couple of months ago, and he was very Delphic when replying. I said, well, perhaps you've got some reason why. Perhaps they're in very sensitive talks with their bankers or whatever, and that's possible too. But in fact, I had a look at it, and it's really quite an interesting balance sheet. And I'm a great believer in students studying balance sheets, and I think anybody with any brains can do it themselves anyway, starting, of course, with the regulatory news service announcements, of which I am so fond, and as I have stressed earlier. But Mullins itself is capitalized There's only 20 million shares, around 50p. So it's capitalised at £10 million. And the net asset value, after stripping out intangibles like goodwill and so forth, which I never paid attention to, I think of it more like an accountant's fiction, goodwill. I hope there are no accountants here who speak for goodwill. Perhaps there are. But it's always seemed to me, having long discussions about goodwill is rather pointless. What matters is cash flow. That's how most people live their lives. And so it has to look at cash flow. And I think Mullins is at a very interesting point in his career. You see, it also has a problem, which he keeps on highlighting, which is its pension fund. If you read the notes down a bit further, it's clear that the assets in the pension fund exceed the actuarially computed liabilities of the pension fund by about £10 million. I grant you the figures involved are quite large. It's around £300 million gross, and of course those sort of figures can move around quite a bit. But quite clearly, what was always a huge problem for Mullins, I'm going back now 5 years, seems to me to have come to a halt. And Mullins has the problem, for a small company, of having to pay £1.7 million a year into the pension fund. And it doesn't take a great deal of imagination to see that before long there's going to be a walloping surplus. The surplus is already at £10 million, but it's going up by £1.7 million a year just for the purposes of safety. We'll be seeing that Mullins will really be a pension fund which has an engineering concern on the side, which I'm not sure the shareholders originally went in for. My guess is that on a realistic accounting basis, provided the business is not making a loss or is on the cusp of making a loss, I suspect that Mullins shares, which are around 50p and yield, 4%, something like that, I think Mullins is worth way over 100 pence, possibly 150 pence. So if I had Mullins, I do have a lot of Mullins, I certainly wouldn't sell them, but actually I think it's something I think very seriously about buying. The caveat I have is that the AGM statement, which came out yesterday, was quite as Delphic as the finance director had been when speaking to me 2 months ago. And the comment in the remark or statement put to the AGM was that they thought that the results of the company would be in line with the board's expectations for 2016. Well, you can make of that what you will. All I would say is I don't think Mullins is now about to dive off the cliff and have a desperate discussion session with its bankers. I don't think that's going to happen. However, for those who take these matters seriously, it's surely possible to find out what the market is in cigarette-making machinery at the moment. That's what it's about. And it's a question of knowing the trade, really. You've got to find out who buys this equipment. You bet your boots there are agents and that sort of thing involved. And you can find out who wants this equipment and how much they want it and where they want it. Mullins has always been a tremendously well-respected company for years and years and years. And so there's nothing spivvy about Mullins. It's just a question of finding out what's going on Mullins. You might say I've been rather ineffectual in finding out myself. Well, perhaps I have. And perhaps there are others who've got the magic way in to find out what is happening on the ground with Mullins. I suspect it could be very, very cheap. It's worth noting, incidentally, that Schroders have around 25%, although they reduced that holding below 24% yesterday. They announced that. And they're not stupid Schroders. But funnily enough, there's no other large shareholder in the company at all, which absolutely amazes me. But that's just the history of it. The point, really, I'm getting across here is there is a huge opportunity for those who are prepared to dig around using their internet connection in a way which was never the case even 10 years ago. And personally, as you can see, I find it very, very interesting. I can't see why more people don't find it interesting. It's all written down and out there, and it's a tremendous opportunity for anyone who's prepared to put in a little bit of effort. I have to say that the lady who's here for Burnbrae is giving me sign language. It says, "You must stop gassing," and that you must now give an opportunity for members of the audience to raise some questions, should they wish to do so. Well, the answer to that is, if anyone has a question, perhaps they would care to raise it. Hello.
What's your view on the markets at the moment?
Well, I've been wrong for so long in the matter of this quantitative easing affair. I think I'd be much wiser not to express a view. But if I have to, I do wish you wouldn't ask these questions. It's just a way of being caught out instantly. But I have a chart service originating in Vancouver, which I find very interesting, and I have followed them for many years. And last night, they said one should be short of silver and gold. Well, all I'm taking that to mean is a signal not to buy any silver or gold for a few days, and after the prices come down a bit, then follow my star. I'm terrifically bullish on gold at the moment. The case is nothing very original. It seems to me so stark, staringly obvious. It is that this country's debts are way out of control. Osborne can lie his head off, but the fact is it's bad and it's getting worse. And of course, the trouble is not confined to this country. It's true on the continent, and it's not much better in America. And the position in Japan is hopeless. And we are in a time of NIRP, NIRP, which, as everyone knows, is negative interest rate policy. Well, I think negative interest rate policy, whose sole purpose is to stimulate expenditure, is bound to end in tears. I can't see it'll do otherwise. And that there really is now, as to when, I'm not so sure, but there is the need now is for governments to inflate away their liabilities. This is not going to be pretty, incidentally. But under those circumstances, gold will have an absolutely tremendous run. Once it gets going, it'll move quite suddenly, because, of course, people have held off gold now for years. But when it turns round, it'll be spectacular. And I think that seems to me what I would do by way of being bullish. Yes, and I won't add any more, but that's about it, I would say.
A very quick question regarding the AIMS market and the trades. How do you feel about this petition? Because I'm for the petition for where sells are shown, and the buys are shown as sells.
I beg your pardon.
Where the buys are shown as sells.
Yes.
On the market in the AIMS.
Yes, I understand what you're driving at.
Yeah,
because what is shown as a buy is, to my certain personal knowledge, often a sell, and vice versa. But I really don't. I don't get worked up about that personally. I mean, the only reason why I follow buys and sells is just to check my own bargain through the market. And I like to see that the bargain has been done, and I can go back to sleep. But I don't attach any significance to it at all.
Thank you. When companies such as Amazon at the moment, or Netflix, and we were told, not by your good self, but another person this time last year, to look at LinkedIn because the PE value essentially was so high.
Yes.
And LinkedIn did have a dive, and now people are asking us to have a look at Amazon with perhaps a PE value of 66 or so,
yes.
And after last year's growth, and it just seems to go on and on. I just wanted...
Well, I share your bemusement, because these American super stocks, as I might refer to them, seem to be unrelated to commercial reality. I don't know where we are with LinkedIn. I saw the big fall, which you alluded to, but I wasn't there, and I don't propose to either. But there is this very real problem, the quantitative easing, i.e. the nil interest, or practically nil interest rate policy for cash, has had the effect of the American retail investor buying absolutely anything. There is no thinking about it at all. Worse, there are perfectly reputable brokerage businesses who say, well, this is where the crowd will descend next. Therefore, not merely should you not ignore this stock, you ought to buy it, because it will be held up by the American retail investor. Well, once you step into that land, you've rarely entered another territory, and to me, it's completely mad. For instance, if asked, the company which clearly stands out as a nonsense in America is Tesla. It bears no resemblance whatsoever to commercial possibility, let alone probability. And it's capitalized, as you may know, at around $33 billion. And the problems it faces are huge. And it's got net assets of, I don't know what it is, $2 or $3 billion or something like that. And if it has even half the success it seems to think it will have, it's going to have to raise a vast amount of cash to continue. You could do it in a convertible loan stock, I suppose, rather than ordinaries, but it's an enormous amount of money it's going to have to be raised, and it's hard to see the share price will be indifferent when this stock comes to be placed. Perhaps they are on the cusp of doing it now. I simply don't know. As to how the American retail investor will react to Tesla issuing more stock, I don't know. He is a complete lunatic. And the fact is, he could do anything in the short term. In the long term, of course, I think Tesla is probably the best short of the first half of the 21st century. At least so I keep on advising Jim Mellon, and there's no doubt that there will be a huge sum made out of it. The whole thing is nutty. It doesn't bear any resemblance at all to possibility. I won't bore you with why I just say that, but if you doubt it, log on to Seeking Alpha, and you will get not tens, you will get hundreds of articles on Tesla, some written by bulls, some written by bears. But the articles written by bulls are mad, and therefore you will see the rest of the argument laid out. I think you'll make a lot of money there. My golly. Sorry, I can't see you.
Final question.
Hello? I'm very sorry.
A couple of questions, if I may.
Yes.
You touched upon the gold market. I'm also interested about your thoughts on the energy sector. On the energy sector, because in terms of the renewables, everybody's talking about, I think it will take a very long time to build that infrastructure. So do you see a future for the hydrocarbons? And my second question is specifically on Watchstone.
Yes.
You've been writing quite a lot about that recently.
Yes.
Now, I did put on the board last year at the AGM there that they opted for the name Watchstone perhaps. They could not see any green shoots of growth for the company. And they advised me not to read too much in the name. But, they're hardly doing anything, so do you still maintain the price between 400 to 500p for the company?
Yes.
Thank you.
Well, let's deal with the easy bit, which is your question about renewable energies and the hydrocarbon sector. You can take it I know nothing, and therefore, that being the case, I'm alleviated from answering your question. However, on Watchstone, I take a different view. I made quite a lot of money shorting Quindell, as Watchstone used to be known, and I really thought no more about it. But I have inquired into the approximate balance sheet of Watchstone as we speak, and there's about 300 pence cash for sure, and there's about 250 pence by way of a valuation which one might put upon its North American assets. And here it's interesting in that there's the possibility, I stress the possibility, of a further 100 pence out of the industrial hearing loss business in Watchstone. Personally, I don't put a lot of value on that, but on this basis, the known assets of Watchstone tot up to 650 pence. And this is in contrast to the current share price of 230. If something has gone wrong with the North American investments, and appreciably wrong, then the obligation is upon the board of Watchstone, which is a highly reputable board, to stick their hand up and say what's gone wrong and what they're doing about it. But they haven't said anything of the sort. And there is the further point that the directors announced on or about I think it was the 26th of March, or it may have been the 21st of March, their long-term incentivization plan, whereby they get 10% of whatever they realize above 550 pence. Well, I don't imagine they signed that because they have no intention of having a good go at it or making a good profit. So, to me, Watchstone is a stone bonkers buy. It's a very strong one. And that being the case, I urge you to buy it.